Hey guys, welcome back to the Dutch Investor channel. Lately I've been receiving a lot of questions in regards to natural gas and prices and the expectations of it, and the people are wondering what my thoughts are and what my expectations are. And overall people seem to be really stressed out about the low gas price, and they think that it's gonna be all bad from here on out. So a lot of worries. I myself am not worried at all. At this point, it's just 20 degrees in the Netherlands. I'm just enjoying the sun throughout the day, and obviously, I am not worried at all about the gas price, and that's why I have about 70% of my portfolio in gas. So, I would like to tell you why. And to start off, I should explain to you how the commodity cycle works. And I simplified it, but I think it is easy to understand in that way. So, let's start. So let's assume that a commodity cycle starts at a high price. When prices of a certain commodity, let's say natural gas in this case, is high, that means that it is attractive to have a business in it. So it will increase competition. And when you have more competition with your commodity, there will be more production overall inside the whole commodity business, like the whole commodity area basically. And when you have more production, you have more supply. And well, everybody who has had economics, I guess you would say, when there's more supply, in general, the prices will lower. But it is a cycle. So once the price is lower, the revenue will lower as well of all the companies that are dealing in the commodity. And when you have lower revenue, there will be less cash coming in while your costs stay the same, which means that your financial health will worsen. When your company is not that healthy anymore, financially speaking, you have the risk of going bankrupt. And when there are bankruptcies, you will have less competition. And when there is less competition, there will be less production, meaning less supply, meaning higher prices. And then the cycle starts again. So when it ends here, it goes back up here, and you go all the way down again. That's basically how it works. So let's see where we are right now. We are currently in a very low price environment, and that is also why people are stressed. What does this mean? This means that there will be lower revenue. When there's lower revenue, there will be lower expectations of future results. That will result in lower share prices. If there is a longer low price environment, there are obviously risk of bankruptcies, and as we just talked about, once they are going bankrupt, they will get higher prices. But we are not there yet. We are still at the low price environment, and right now it is obvious that there are risks of bankruptcies in this field. So what does that mean? It means you can either be very scared or you could look for opportunities. I don't think I have to explain to you which option I've chosen. I think it is clear that I have looked for the opportunity. I looked for the opportunity when the gas price was a little higher than it is now. It was a bit unexpected, obviously, that it went this low. Did we expect such a warm winter? Perhaps we did, perhaps we didn't. The most of the gas producers at least didn't. So yeah, but let's have a look at the chart right now. So how does the gas price, how has it been moving the past 20 years? And here you see the gas price of the past 20 years, or actually a bit longer, 25 years, give or take. So it starts at about, let's say, an average of $4. It peaks to like 16, 16, 18, 19, 16, and we're talking about 2008 here. Here you can see the recessions, the drops. So this is the tech bubble, and this is the global economic crisis of 2008. And you see what it does to the gas prices in general. So that is interesting, but what is mostly interesting is that you can see that on average, I think you'll be looking at the price here at around $4 range. But overall, I think if you would even this out, you will see a slow decline downwards. Obviously, a decline is always downwards, but you see a decline towards the end. That is what I was supposed to say. And right now we are at the lowest natural gas price that we have ever seen, at least in the 25 history. I couldn't find any charts that went further back. This chart, by the way, is from Macro Trends. It's a pretty good website, macrotrends.net. You should check it out. There's a lot of nice graphs there. And yeah, so if you think about the cycle, then the question is, where do you want to buy, right? Do you want to buy when it's low, or do you want to buy when it's high? The investing principle states buy low, sell high. I guess it is no surprise. Everybody knows that. So when we look back at the graph, buy low would mean we buy in this range, right? There's no doubt. So when the prices are this low, yeah, we're going to invest in natural gas in one way or the other. If it's high, we're not going to invest in it. However, if you look at any of these companies and you go back to this area, let's say 2005, with these prices, obviously they had an amazing revenue, they had an amazing growth, they had an amazing PE ratio, like their profits were insane. So they look incredibly attractive even when they were overvalued because they had such high profits. But you are buying it at this price. So even though it looks like it's cheap, let's say you have a PE ratio of 2, the company looks very cheap. So if you just think about the thesis, then you're going to say, hey, it's a pretty low valued company, so I'm going to buy it now. But why is it low? Because its profits are insanely high and this is not manageable to have that again. So that is something to keep in mind when you are investing in commodity businesses. A high PE ratio does not mean that a company is undervalued. It means that it has probably had some pretty good selling prices in that year. So, as you might understand now, it is easier said than done than to buy low and sell high even in the commodity business. Why? Because when stuff goes down, it looks pessimistic. Insanely pessimistic. If you check the news now, it looks like gas will never be used again. Nobody wants to buy gas. Everybody wants to use renewable energies. The news, the people, the public, they all have an opinion on natural gas and oil. Doesn't really matter. You know it's going to be negative. So obviously it has a bad influence on all the stuff that regards these kind of commodities. And you are influenced by it. You are thinking, yeah, well, they might be right. I don't think this has a future either. It's in like, why would I invest in this? And because you think like that, a lot of other people are thinking like that, and that is why the prices drop in the first place. Now, I don't think it's a secret right now what happened to the oil price yesterday. The oil price, the future contract of May 2020, I believe, or the April one, I believe it was May, they went negative, meaning that if you would have bought a contract right now, you would have gotten money and you would have gotten oil. And the madness around it was insane. So many people were looking for opportunities and how can I invest in oil because yeah, this is free money or something like that. People were thinking like that. But when something like that happens, which has never happened before, I guess, at least I couldn't find anything about it, then you shouldn't be looking for opportunities. You should first understand what is happening. And the first thing that is happening, or what you should understand, is that why are they selling it at a negative price? Because they have no storage. They have nowhere to put the oil that has been produced. So they cannot go through with the contract. So let's say they have a contract and they want to buy 100 or 1,000 barrels of oil. Yeah, you cannot fulfill your end of the deal because you have nowhere to store that oil. So you need to get rid of that contract because otherwise you will need to store that oil. If you cannot store that oil, what would happen? You will not hold up your end of the deal, and the company that you were supposed to buy the oil from will be stuck with an extra 1,000 barrels of oil, by the way, which is not a lot at all, but it is a lot if you have to store it yourself as an individual. So what do they have to do with the oil? They cannot do anything with it. They cannot store it either, so they have to get rid of it. How are they going to get rid of it? Well, I don't know about you, but oil in general is not that appreciated by nature. It's not like, okay, let's put it here and dump it here and who knows what happens. No, it's very bad for the environment. a lot of people will be mad about it, and you'll probably get sued if you do that. But they don't have any choice because they have nowhere to store it. So that could very well happen. If you are holding up a contract by then and you are supposed to take off the oil off their hands, then they are going to sue you. So they are being sued, but they are going to hold you responsible because you are supposed to take off the oil off their hands. So if you want to hold on the contract and you want to try to make money while getting money, sure, but you need to be sure that you can store the oil, because if you cannot hold up your end of the bargain, you're going to be pretty, how do you put that nicely? Well, I guess you know the word. You're not going to be too happy about it. So, and nobody was talking about that. Like, everybody was like, oh, oil price, if I invested it now, you can get like, 10,000% return or whatnot. Like, it was just insane what people were saying. But yeah, that's basically how it works. So it was never an opportunity there anyway, because people were just trying to get rid of the contracts. They don't want to have the oil right now. I'll click to switch to the next one, but actually I dwindled off a bit about the oil price or the correlation. What is important is right now there's an overproduction of oil that affects the economy badly, as you've all seen in the news and stuff like that. So they're going to cut oil production, and they have already decided they're going to do it, but it's not enough yet, so who knows what they're going to do. They cannot function at these prices, so I'm assuming it's going to go even lower, the production. So what does this mean? Whenever oil is being produced, they are also producing like gas. It's basically something that also arises when you are producing oil, when you are gathering oil. So if the oil production lowers, the gas production will also lower. So when the oil price will increase, the gas price will also increase. We've seen already that for a little bit, but obviously we're looking for a gas price in the $3 range and not the $2 range. So on to the next point right now, the pessimistic outlook. Like, I don't have to tell you that natural gas is not an attractive investment right now. ESG investment is not our friend in that regard, even though gas is pretty good for the environment. Like, it's relatively not bad, I would say. I wouldn't say good, but it's not that bad. It's probably the best solution we have right now over other solutions. Then I'm more thinking about renewable energies right now. So obviously you have nuclear energy, which is also pretty good for the environment, but a bit more risky. But there's a pessimistic outlook on gas. There is no going around that. You can just Google it and you will find news messages or anything in regards to gas, and it will not be positive. So probably that's why it is a good investment right now, because nobody wants to look at it. Well, the gas prices are low, the oil prices are low. People will not be able to sustain these low levels as a companies, because they have had bad years for like 10 years now or something. If you look at an average oil and gas company, it has such bad years. So bankruptcies are likely. There is no going around it. I think it will happen. If it doesn't happen this year, it will happen next year. But when bankruptcies happen, the prices will increase again, because there will be less supply. But what is a nice side effect when there are bankruptcies is that there is a time to shine for an acquisition business model. And guess who has an acquisition business model? It is DGOC. And well, I'm not going to talk too much about DGOC already, because I have like 2 hours of it already, and on YouTube. So if you want to check that out, feel free to check it out. I'll link it in the description if you haven't checked it already, but I'm assuming you did. That's why you are in this channel. So yeah, it's actually pretty good that the prices are low. And while people are worried that the prices won't increase anytime soon, I am actually hoping that the prices will not increase anytime soon, because the worse it gets, the better it will get. Basically, the more bankruptcies there will be, the more opportunities for an acquisition there for DGOC, and the lower the prices get, there will be less supply when they go bankrupt. So the moment the prices will increase again, they will gonna increase like insanely. Like, we just have to stick through these low levels. So I'm hoping that the prices won't increase. And that is one thesis. Like, it doesn't increase, DGOC will acquire more. That will basically grow their business. If they are unable to acquire more, then probably the prices will have increased. If the prices have increased, they will have better revenue, and if they have better revenue, you're gonna have better returns as a company. So there is, it looks pretty good. And if I think about all the known risks that we think about the gas industry right now, I think they are non-risks for DGOC because of their business model. They have an extremely low production cost, so even if the prices stay as low, they're not going to go bankrupt anytime soon. I don't think they could go bankrupt if their production stopped or something like that, but that's a risk with any business. So the known global risks in regard to gas, I don't think they are that likely. If you think about the gas prices or the gas production that they have on a global scale, it's like 0.1%. So it's like, okay, even if the demand slows down a little, they can still sell it because they have hedged, so it doesn't really matter for them. And finally, and then I'll round up this video, because people have been asking me about DGOC and what risks do I see, and they all see risks, and I've listed some of them here, and some risks I don't even consider risks, so I haven't listed them here. But the one risk nobody's talking about, and that I actually think is a risk, is the current strength of dollar. Because we are investing, well, I'm looking at it from a European perspective, but we are investing with a euro in dollars, and we are buying this company right now while the dollar is extremely strong. If the dollar weakens, which could very well be the case with everything that is globally happening right now, and I will do another video about that in the future, let's say about inflation and about the market leader and the dollar in general. But if the dollar weakens compared to the euro, it will be pretty detrimental to our returns. Like the dividend will be lower in euros, the share price increase will be lower in euros, and people do not really think about this because DGOC is listed on the UK stock exchange, and yeah, there they are listed in pounds or in pence in this case, but in general like the UK currency. So people are not really thinking about it, and they think that it is a good time to buy because DGOC, because the pound is very cheap compared to the euro. I don't think that's the case because you have to look at where the business is, and the pound is basically a mediator in this case. And if you check the dollar to pound currency ratio, the currency from pound to euro and then from euro to US dollar, you'll see that there is a connection. And in this case, you will notice that you are basically just investing in dollars, but it doesn't feel like that. So that is actually a risk that I think is going to happen, and it could happen within like 5 years, where the dollar will lose its strength, and it could be even sooner. And the moment that happens, then yeah, your investment thesis will fall, or my investment thesis will fall a bit. Is it that bad? No, I don't think so. I still think that it will be a good investment, but it will have an effect on my returns because yeah, I am not hedging my currency risk. And yeah, that is something to consider. Like, I don't think people will realize that often, but there has been a time where the dollar was trading for, or you could, with €1, you could buy $1.60. Right now you have like €1 and what is it, 8 cents? So for €1 you get $1.08. So the dollar is relatively strong, and if it goes back to those levels, which obviously was the other extreme, that means that our investment would lose value by about 50%. And yeah, it needs to grow very hard if you want to make up for something like that. So that is a risk that nobody thinks about, and it's not really related to natural gas, but it is related to DGOC, and most people ask me the questions because of DGOC. So I thought I'd point that out. And yeah, that's it. I hope you guys learned something today. I do like commodity businesses. I think they are amplifiers. It's better to buy a good business, in my opinion, of a commodity than to invest in the commodity itself. Let me know down your thoughts below, because I know that it's something that not everybody agrees with, because you take on extra risk because you are investing in a business, and then you have management, and then you have all other things to consider about, or to take into consideration, I should say. So let me know your thoughts in the comments below, and if you enjoyed this video, please consider leaving a like. It helps me out, and it knows me, and it gives me an idea of what kind of videos you like. And yeah, if you would like to hear more about my thoughts in general, then I could share more of that. And if you just want me to do businesses, then yeah, just let me know down in the comments below. I'd appreciate it. So thank you guys for watching, and if you have any questions, feel free to reach out. And for now, have a nice evening.